There are 4 things you need to understand about a crypto chart. Just 4. And the last one looks like a letter you learned in kindergarten. But once you see it on a real chart, you will know something about the market that 90% of investors completely miss. I am not exaggerating. By the end of this video, you are going to look at charts differently for the rest of your life. If you have been following this series, you already know how to buy crypto, the mistakes to avoid, how it compares to stocks, the learning roadmap, and 5 strategies that actually work. But all of that knowledge has a blind spot. Without being able to read a chart, you are making every decision in the dark. You do not know if you are buying at a great price or the worst price of the month. You do not know if the market is gaining strength or about to collapse. You are essentially investing with a blindfold on and hoping for the best. Today, we take the blindfold off. Let me start with the most basic building block of every chart, the candlestick. When you open a price chart on any exchange, you will see rows of shapes that look like rectangles with thin lines poking out of them. Each one of these shapes represents a specific period of time. It could be 1 hour, 1 day, 1 week, depending on your settings. And each one tells you a complete story about what happened during that time. A green candlestick means the price went up. The bottom of the thick part is where the price started, and the top is where it ended. The thin lines above and below, that are called wicks posts, show the highest and lowest points from the price touched before settling. A red candlestick is the mirror image. The price went down. The top of the body is where it opened, the bottom is where it closed. That is literally all there is to it. Green means up, red means down. The body shows you the open and close. The wicks show you the extremes.
Once you understand this, the chart stops looking like random noise and starts telling you a story. And damn it,
it's a story of every battle between buyers and sellers during that time period. The second concept is support and resistance. And this is where things start to get powerful. Imagine a ball bouncing on a floor. Every time it hits the floor, it bounces back up. That floor is what traders call support, a price level where enough buyers step in to prevent the price from falling further. Now imagine that same ball hitting a ceiling. Every time it reaches that height, it gets pushed back down. That ceiling is resistance, a price level where sellers take over and push the price lower. You can find these levels on any chart by looking for areas where the price has bounced multiple times. If Bitcoin drops to 65,000 3 separate times and bounces back up each time, 65,000 is support. If it rises to 75,000 3 times and gets rejected, 75,000 is resistance. Why does this matter? Because buying near support is like buying on sale. Buying near resistance is like paying full price right before a discount. One simple concept, and it can save you thousands of dollars over the course of your investing career. The third concept is volume, and most beginners completely ignore it. Volume is simply the number of coins being traded during a given time period. You will see it as a row of small bars at the bottom of the chart. High bars mean lots of activity. Low bars mean the market is quiet. Here is why volume matters. It tells you whether a price movement is real or fake. If the price jumps up 10% on massive volume, that move is backed by thousands of people buying. It is a strong signal.
But if the price jumps 10% on tiny volume, that means almost nobody is participating. It is a weak move that could reverse at any moment. Think of it like a vote. If 10,000 people vote yes, that is a mandate.
If 5 people vote yes, that is a conversation.
Volume is the difference between a market movement you can trust and one you should be suspicious of. And now the 4th concept, the letter from kindergarten. There are only 3 patterns you need to recognize as a beginner. They are so simple, you will wonder why nobody taught you sooner. Look at a chart and find a spot where the price dropped to a certain level. Bounced up, dropped back down to roughly that same level, and bounced up again. The shape it makes on the chart looks exactly like the letter W. A double bottom often signals that the selling pressure is exhausted and the price is about to move up. W for Win Tao, that is how I remember it. Pattern number 2, the double top. This is the exact opposite. The price rises to a level, gets pushed down, rises back to roughly that same level, and gets pushed down again. It looks like the letter M. A double top often signals that the buying pressure is running out and the price may drop. M for move away. Pattern number 3, Tame, higher highs and higher lows. If each peak on the chart is higher than the previous peak, and each dip is higher than the previous dip, you are looking at an uptrend. It looks like a staircase going up. This is the simplest trend indicator in all of technical analysis, and it works on any time frame, any coin, any market. W, M, and a staircase. 3 patterns. That is your entire starter toolkit for reading charts. Now let me be honest with you, Fair. This is the tip of the iceberg. Real technical analysis includes indicators like RSI and dozens of other tools. What I just taught you is enough to stop investing blind, but it is not enough to master the market. The course I recommend in the description has an entire module dedicated to chart reading and technical analysis, with interactive examples where you practice on real charts, not just theory. That depth of practice is something a 10-minute YouTube video simply cannot provide. Link in the description bag, affiliate link, no extra cost to you. So now you can read a chart. You know the strategies. You know the mistakes to avoid. You have the learning roadmap. Piece by piece, video by video, you are building a real understanding of crypto that most people never develop. But I need to tell you something that has been weighing on me.
Right.
And honestly, it might be the most uncomfortable video I have ever made. Because everything I have taught you so far has been positive, empowering. Here is how crypto works, here is how to succeed, here is how to avoid mistakes. But in my next video, I need to talk about the other side. The side that most crypto channels will never show you because it hurts their brand. I am going to tell you the truth about crypto in 2026. What is genuinely working, what is completely overhyped, and what you should realistically expect, however, not what influencers want you to believe, but what the data actually shows. I am going to call out the biggest lie being sold to crypto beginners right now. And if you have already fallen for it, I am sorry. Better to hear it from me now than learn it the hard way with your own money. Fair warning day. If you are emotionally attached to meme coins, the next video is going to hurt.